Okay, great. Well, let's get started. Good afternoon. Hello. Thanks for joining the eCapital Insights webinar series. Really excited to have you here today, and I'm thrilled to introduce Heather Brown here momentarily. Before we get started, I do want to introduce myself. My name is Corey Fisher. I'm responsible for our go-to-market here at eCapital Advisors. That includes everything from our overall customer experience to our OneStream partnership, as well as working closely with our clients and our COE leadership to make sure we're delivering excellence in every implementation. So really excited to be a part of this series. This, as I keep saying, is a educational webinar series. This is the second installment for our RCM TXM practice, led by Heather Brown, who is our industry expert and COE leader within that practice. And we are recording these sessions. So if you do want to follow up and listen to something from today, or you want to listen to other parts of the series, we have a link at the end of the presentation today that will connect you to that and give you some additional insights as well. So really looking forward to the conversation today. And without any further ado, I'll hand it over to Heather Brown. Heather, take us away.
Thanks, Corey. And thanks, everybody, for joining us today. For those of you that don't know me, my name is Heather Brown, and I'm a senior director here at eCapital Advisors, and I am responsible for our account reconciliations and transaction matching service line. This is the area that I focus on exclusively. I've spent about 22, maybe 23 years focused on this industry. I was one of the founding employees at Blackline that invented their first generation product before leaving to found a small software company that Trintech acquired that became the basis for the Cadency solution. And then after Trintech, I spent about 7 years at Oracle in product management, building out the Oracle reconciliation solutions, and then made my way over to OneStream. You're going to hear me, if you've had a chance to talk to me before, refer to myself as a platform evangelist. I absolutely love working with the OneStream platform. And my favorite saying these days is, if you can think it, you can build it. And that's exactly what I've done here. When I left OneStream and made my way over to eCapital on the delivery side, I established a practice here that's focused exclusively on the account reconciliation and transaction matching space, and use the OneStream platform to develop a series of accelerators, as well as tips and tricks, some of which I'm sharing with you today, that help the clients get the most out of their OneStream investment. So what I'm going to be talking about today is called data enrichment. And this whole eCap Insight series is designed to deliver, Core, I think you've called it snack bite content. It's content that can be delivered in 30 minutes or less so that you can get on with your day. So data enrichment, the subject of today's session, is designed to help you achieve the highest auto match rates possible. And if you're new to transaction matching, I should probably define that term. Auto match refers to the process whereby the technology, the transaction matching software, attempts to match transactions from different sources together without users being involved. That's why they say it's auto match, because it happens automatically behind the scenes. So for a typical corporate, if I think about the use cases that we cover for matching, we're generally trying to match internal data from the general ledger, subledger, or some internal operational system like a point of sale system to external data like bank files or credit card processors are some of the more common sources that we tend to work with. One of the most challenging aspects of transaction matching processes is matching data when there's no explicit logical relationship between the data sets. So consider for a minute like a bank reconciliation example. Many bank payments and settlements are batched together by the bank when the transactions are settled. So this means they're going to appear as a lump sum summary number on the bank statements, while in our internal systems, they're going to exist as individual transactions in those systems of record. Or if you're a retailer, you might have a large depository footprint, meaning many stores or branches that are making deposits into the same bank accounts. And with both of those examples, it can be really difficult to correlate that data that we're seeing on the bank statement to the data that's coming from the bank. So it creates a gap, and it makes it very difficult to do that matching. So the techniques when we're facing challenges like that, there's two general techniques that we'll use to create those relationships when they don't normally exist. And when I say relationships, I mean relationships between our internal data sources and our external data sources. So the techniques are merging and stacking. With the merging approach, you're going to be adding columns to your data sets. With the stacking approach, you're going to be adding rows to your data sets. And for the next, 15 minutes or so, I'll be explaining both of those approaches and sharing some examples of when you might use those two techniques. So starting with merging, let's first lay out the landscape here, explain the example. Let's consider a bank reconciliation where we have retail deposits being posted to the general ledger, and we need to match those retail deposits to data from the bank, and we need to match on three different fields: a branch code, a batch reference number, and a deposit date. So in this example, we're going to pretend that the GL transaction side of our data does not have either that deposit date or the batch reference number. It only has the branch code. However, the other two columns we need are available in a different report from one of our other internal systems. And when we looked at those two reports, we could see that we could build a relationship between the records on those reports using a common set of columns which existed within both reports. So if we use that approach, we will be enriching the GL transactions data set so that when we're done with the process, it will contain all three columns that we need for matching: the branch code, the batch reference number, in addition to the deposit date. Now, how we actually do this mechanically in OneStream is first by importing what we call the raw data from those two reports that we're going to be working with into two separate import steps, which are not linked to transaction matching. Rather, the data in those import steps is just going to sit in stage. So I've included on the slide an image of what I'm talking about here. This is a workflow profile definition. And I'm talking about these first two steps, the internal source 1 and the internal source 2. These are our raw import steps from those first two reports that we pulled in. Then what we're going to do is create a third import step, which is this internal source 1 and 2. And we're going to load data to that third step using a connector business rule. That connector business rule is going to query stage using, if you haven't used it before, it's a really long word, but it's the V stage source and target data with attributes view. That is a view that makes it really easy to pull data out of stage into a connector business rule query. So in that business rule, we're going to query stage using that view, and we're going to join together that first report to the second report and create a final data set that has exactly the same number of transactions on it that we originally started with, but it's going to have the extra columns on the end of it for the deposit date and the batch reference number that we need in order to be able to match that GL data to the bank data. So I drew a picture, well, using icons, because I thought it was easier to see this using graphics. On the left, we have our internal general ledger data. On the right, we have the external bank data. We need to match on three fields: branch code, batch reference number, and deposit date. Only the branch code was originally available in the GL transactions data. This is represented by the first blue column here on our internal data. By merging in data from a second report, we are able to enrich the GL transactions to include the extra columns that we need: batch reference number and deposit date. This is represented by the yellow columns in the left table. And now we can match exactly these three columns to the same three columns which already existed in the bank transactions internal data, external data on the right. So let's talk about that second approach, stacking. So for this example, we're going to consider a bank reconciliation where the bank settles transactions in summary, but our internal systems have individual transaction level detail. So we've got individual lines on the GL matching to one summary settlement on the bank. And compounding the problem here is when you look at these records, there's no obvious or logical relationship between them. We couldn't even eyeball these transactions and figure out which ones are in the batch settlement. I mean, there's logic, but it's something that's not visible to us in the data, and it's not anything we can code for specifically. We do hit this pattern sometimes. So when you face cases like that, what we start looking for are additional reports, usually on the bank side, that will delineate for us or extrapolate exactly what transactions are in that batch total. So this is where we would start to use what we call the stacking approach, where at the end of the day, what we're going to be doing is adding rows into our data set. So we start by importing what we have on the GL side, which is those transaction level lines, into our internal data set. Then we're going to import the bank transactions that have the summary settlement, pull that in first. Then we're going to go grab that extra report that we got from the bank. Sometimes it comes from Treasury. I've had it from both places. And that second report is going to have the individual transactions that are included in the batches. And we're going to pull that in as well. And if you're astute, which I'm sure all of you are, you're probably thinking that, Heather, you've just double counted your transactions on the bank side. You've got your gross settlement, but you've also pulled in the detailed transactions. And I would tell you, you're exactly right. That's exactly what we've done. So to compensate for that, you need to take that second report that you just pulled in and import it again, but the inverse of it, meaning you multiply the amount by -1. And I usually bring that in subtotal. So not all the lines again, just a lump sum summary number. So mathematically, it nets off against each other. But where the value comes in is on the matching side, which I think is easier to grasp when we look at another picture. So this diagram here is representing that stacking approach. We match the transactions on the internal general ledger data, which are line level detail, to the detail transactions that we stacked into the external bank data. So this is represented as the blue row on the left table, matching to that top yellow row on the right table. Then we're going to do a one-sided match on the bank side. We're going to take the bank summary settlement, which came in through our regular bank file, and we're going to match that to the inverse of the detailed transactions that we stacked into the external data set. So using that approach, we've been able to achieve the objective of matching that many to one, but we did it by stacking the detailed transactions into our match set. But at the end of the day, everything matches. When we're building transaction matching match sets, one of the questions that some of you might be thinking is, how do you know which method to use? And, I have found over the last 20 years that transaction matching is more art than science. You're going to get comfortable with different techniques, and those are going to be your go-to techniques that you'll use time and time again. But there are some guiding principles. Generally speaking, I try to use merging first. Remember, merging is where we add the columns, not the rows. And the reason I prefer that is I think it's easier for people to understand. I don't typically like adding rows into our data sets if we don't have to. Sometimes it's necessary, but if you can find the reports that have the information that you need, and you can link those reports together using columns that exist within the reports, I feel like that's a cleaner, simpler, easier solution to both implement and to support. So I'll try to use that method first. If I can't, then I'll end up using the stacking. Stacking is generally restricted to cases where we have this summary versus detail matching situation, and it's just not possible to create the logical relationships between the data. So I do use both. I just probably merging, I use 75% of the time, and stacking maybe 25%. So this particular session was rather brief. That was our promise to folks when we created it. We're trying to pass bits of information that are helpful and then get you on with your day. If you did find today's session helpful, then I wanted to recap for you what we're going to be covering in our upcoming sessions. We're doing these every other month. So my next session is on June 18th, and I'm going to be talking about principles around designing transaction match sets, which is more along the lines of how data and split it into what OneStream calls match sets so that you get the most optimized process, not just from an auto match point of view, but also from an interactive matching. And then after that, we're going to be getting into some more technical specifics around data manipulation. I'll be talking about how we use transformation lookup tables to normalize and enrich the data. So that's on August 20th. And that's, again, all around optimizing the data to get the highest auto match rates possible. I'm planning to actually share code snippets on that one. On October 15th, I'll be talking about solutions that we use to trap errors and warning conditions. The goal there is to prevent incomplete or invalid data from getting into the matching workstream in the first place. And then on December 17th, I'm going to be discussing how clients are leveraging the matching process to generate journals for automated post back into their accounting system, which is something we do on virtually every matching project that we have. So I wanted to go ahead and pause for any questions.
Heather, we have our first question. Patrick is asking, if you look in the chat, is the stacking example, if you can get a detailed data set from the bank, why use the summarized data set at all?
That's a really good question. So the other option would be to use a bypass condition and just use a bypass row to pull that data out of the bank file to begin with. And I've had some clients leverage that. One of the objections that I'll sometimes hear is that they want to make sure that everything in the bank statement is reconciled. I have another client that has cases where the detailed data sets aren't always available. They're available 95% of the time. And using a stacking approach where we bring in 100% of the bank transactions and then 100% of the detail transactions, we can accommodate for that case as well. So either approach, if I'm honest, I've used both. If you don't want to have to bring the inverse of that detailed data set in at all, then you can simply bypass those summary rows. You wouldn't be able to skip the entire bank file in its entirety, because that bank file is going to have a lot of other transactions that you do need. So at best, you'd be able to just bypass the summary settlements, which you'd have to probably do using a complex expression, because it's not, you're going to have to parse different parts of the fields to figure out what rows are the actual settlements, but it can be done. Great question.
Yeah. And on that note, if there are other questions, feel free to put them in the chat or just raise your hand and Marissa can unmute and open it up and you can ask the question live. While we're waiting for our next question, I just want to pose one to you as well, Heather. So, I mean, just curious, how often are you using these techniques and implementations?
Pretty often, Corey. One of the things that surprised me when we started transaction matching for OneStream's only been out for maybe a year and a half, and they went from 0 to about 100 miles an hour pretty much instantly. The types of projects that OneStream is winning are really complicated projects. Clients that have extremely high volumes of data, incredibly complex data structures, and I wasn't as accustomed to dealing with those use cases with some of the other products that I worked with, like Blackline and Trintech, particularly on the Cadency product, are designed to work more with, kind of plain vanilla bank reconciliations. What we're tackling with the OneStream solution, and again, it surprised me, are really complicated operational reconciliations. I mean, like Best Buy is reconciling all their online order systems. I think 50 to 70 million transactions a month is what we're processing in there. And if you take a look at the structures that are coming in, the data that's coming in, in these examples, this is really difficult stuff. So these particular techniques at a client like Best Buy, we used extensively, almost on every match set, where we're merging together, PayPal data with data from other systems. And it's just nuts. And I have a few other clients with a pretty similar complicated structure. For the typical corporate, I think the example that that I talked about here are pretty common. Depository accounts. Again, we're going to typically have line level detail, but batch settlement, that's a great example. Where we're adding in the join fields, also reasonably common.
Okay, that's great. Yeah, I love the customer client examples and stories that you're able to tell about where you've used some of these techniques, and maybe you've done some other creative things to streamline the process. So, obviously the amazing technology within the platform, but then it's also the way you take the approach to streamlining these processes as well. So that's the fun stuff, right?
Yeah, I think this is probably, a great example of why I talk about being a platform evangelist. Nothing is ever as, I think, easy as it seems when you deal with client data. They run businesses that are complicated, and to be able to use these tools that we have at our disposal, it's such a unique experience for me, because the other products that I've worked with in the past were so much more rigid. They didn't have those capabilities. And I just don't find myself these days having to tell clients no, or that we can't do that. It might take me a day or so to figure it out, but I've been able to find ways to do this. I mean, we're speaking at Splash this year. I don't want to blow the surprise, but Cummins and Best Buy are both presenting with us on transaction matching, and Cummins is using the merging technique quite a bit in their bank reconciliation use cases. We did, I think, 9 bank recs in about a 3.5, 4-month period. They're getting between a 98 and 99% auto match rate on their operational bank accounts. That's crazy. And it's just because of the ability to do these types of data enrichments and to get the data optimized for matching, so that you don't have to have people in there, hands on keyboard, eyeballing these transactions and trying to match them together. So if you haven't seen that yet, if you're going to Splash, please attend that session. It's on Wednesday at 10:15 in the morning. It's Best Buy and Cummins presenting all about data and managing data around transaction matching.
Yeah, in addition to that, please feel free to stop by our booth at Splash. We're at booth 112. We'll have quite a presence there as well, and we've got some other events throughout Splash. So we'd love to see folks either stop by or reach out to us. You can connect with me here for more details as well. And as mentioned, one of the questions that came up, Heather, as well, is how do I get to the recording of the previous session that we had in February? Well, it's right here. If you pull out your phone, you can capture it via the QR code. And you can see the recording on our website, and we've got it on YouTube as well. We'll also have this recording out there, so we'll begin to collect these series recordings throughout, so you can reference them or pass them along to others. If you have any other questions, now's the time to ask them. Otherwise, we can wrap up. And if you do want to follow up or get a hold of eCapital, we've got all my contact information here. I can lead that charge and make sure that I arrange time with Heather or any of the other resources within our team. Any closing thoughts, Heather, as we wrap?
No, I appreciate you guys joining us here, though. This stuff is really fun to talk about. So I like the opportunity to share what I've learned. It makes my 23 years seem useful.
All right. Well, we kept to the snackable content size today, so we're kept it within 30 minutes. Hopefully that's helpful for everybody here over the midday, and we appreciate your participation and look forward to hopefully connecting with you soon. Thanks so much, Heather, for hosting this session.
Thank you. Bye-bye.
All right. Bye, everybody.